Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Today, we need to have a discussion about buying the dip. And how do you know when to buy the dip or when to leave it alone and just let it go? Okay? How do you know when to buy the dip and when to let it go? So we need to have that conversation today. I want to walk you through my thought process using three keys, three tips, three things that I tend to look at as I'm deciding, like, hey, I'm going to let this one go, or this is an opportunity, I'm going to stay calm, I'm going to continue buying this stock. So here's the thing. For those that don't know what buy the dip means, it's basically buy low, sell high. When I see a company that I like and it's down, this is the time for me to put money into it because I believe that the stock is going to go higher in the future. Problem is, it doesn't always do that. And that's the problem about buy the dip. It's not something that is blind. It's not something that you can just do just because the stock is down. So here are the 3 steps that I kind of gauge. Yeah, buy this one, and don't buy this one, and then kind of a wait and see. Now I have my screen here, and I've got a bunch of lines, so I usually don't try and show those on the screen. I'm using Yahoo Finance, but just because it gets too confusing and there are frankly far too many lines. However, we'll walk through it. So what I'm looking at is the last 3 months, just to condense this. But there are 3 things I look at. The first thing is context, both on a company level, but also on an economic level. I need to know what is going on in the economy that could be hurting this company, but also what is going on in the company that could be hurting this company, the stock. You should probably stop using company so many times. But in either case, take a Netflix, for example. We'll talk about that one, right? Netflix did extremely well during the pandemic. Peloton did extremely well. Zoom all did extremely well during the pandemic when at its height in 2020. Why? Context was we were locked down, couldn't go anywhere. People were eating snacks and stuff like myself. And as I say that, I just remembered that I have an ice cream sandwich that's probably been sitting out for 15 minutes. This probably won't end well for me. But in either case, before I go and eat that ice cream sandwich, the point here is that context says we were locked in the house, people were eating too much, like myself, and needed to find a way to exercise. We needed to find a way to communicate. We needed to find a way to pass the time. That's Netflix, that's Zoom, and that's Peloton. Then context changed. We could go outside, we got vaccines, the world started to open up a bit more, and people left a lot of those companies, which is why Peloton last 3 months, now it's been worse if I zoomed out, but last 3 months Peloton is down 38%. When I look at Netflix is also down about 38%. What else is down around there? So those are 2 that we knew pandemic wise that was the place to go, and now it's not, right? The context has changed. So if I'm looking at that, I'm like, if context has changed, that's why I'm gonna let go. I'm probably not gonna buy the dip on something like that unless, unfortunately, which I hope does not happen, unless lockdowns were to come back. Then it would make sense. But hopefully that's not gonna happen, and unless that does, I'm not gonna go back to companies like that. That's the first thing. What is going on with the company? What is going on in the world that is going to help drive or hurt these particular stocks? Netflix, right? If I look at Netflix is also down close to 38% in the last 3 months. Why is that? Well, Netflix is still alive, right? But they did incredibly well pre-pandemic before that happened. But now, context for Netflix. So we talked about global stuff, right? The pandemic. That was a global thing we all had to go through. Well, Netflix is going through something a bit different. They're going through more competition. You got Disney Plus, you've got Peacock, you've got Amazon and their merger with MGM. I just bought Spider-Man No Way Home, which is top 5 all time. Just say that. But aside from that, you've got all of those, and I'm not even naming. Did I even say Disney Plus? I don't know. But all of those are all competing now. You have less space. YouTube TV. You have all of these streaming apps now cutting into your space and your profit margin. You got to raise prices, which they have. They've got to go out and sell merchandise, which they have. I think it was a good move. They've got to do all of this stuff now to diversify and figure out what they are going to do. That competition has hurt Netflix and the perception of Netflix, which is why they're down, 38, almost 40%. These are the things that help me to understand, like, hey, I don't know. I might have to let Netflix go because it's getting too hot in these streaming wars. Unless I believe that Netflix is going to come out or they have an edge that nobody else has. And I'm not entirely sure that they have that yet. So those are the companies I'm not going to touch. If you don't have the right context, the right environment, probably a better word. If you don't have the right environment, I'm sorry, I can't look at you. Something gonna have to change. You're gonna change your environment before I decide to change my investing decision. So when you're in that environmental category, when you're in that context category of it just ain't looking good for your player, I'm gonna have to let it go. Okay, so that's one way that I look at it. The other thing is the calendar. I let things ride for 6 months. I know everybody doesn't like doing that. That's totally fine. Data supports 6 to 12 months. Let it ride out, come back and check on it. One of the many examples of how this can work, and while it is not perfect, it's never, nothing's going to work 100% of the time, is that go back to 2020. It wasn't that long ago, right? The market absolutely crashed 37, 38%, whatever it was, from mid-February to mid-March. After that, we were done with it in terms of the crash, right? There was some volatility, there was some ups and downs, but it absolutely crashed, and that was it. It did not even last 90 days. So I avoid a lot of overreactions and knee-jerk decisions by adjusting my entire portfolio every week, by doing it every single month. You really hurt yourself more often than not. If you don't want to wait an entire 6 months, which you do not have to do, that is just me. Some people prefer not touching it for an entire year. You can do that too. But the shortest range that I would consider is quarterly. Every 3 months, make a few adjustments, make a few adjustments, make a few adjustments. That means that you're really touching it and making those adjustments to your portfolio only 4 times a year, which is generally a good thing to do. But you avoid overreacting. You avoid, seeing a headline and then, really swerving the car left when it really wasn't anything for you to swerve for. That helps to prevent that. So 6 months is my personal number. Other people have their own, but that helps me to kind of zoom out and say, like, is this just a blip? Is this just something people are overreacting about? Or is this a serious issue that I need to make real changes for? So when I zoom out, and in this case, we're just looking at 3 months just to condense it. If it's been falling for a really long time, take a Peloton. I don't want that. Not only has context changed, but also you've been falling for a long time. That's an issue. I'll bring up Nvidia here too. When we talk about context and dips, and Nvidia dropped significantly after they had a great earnings call. They said, "Hey, things are great, best quarter in 10 years." Blah blah blah. Stock market drops, or really Nvidia drops. I'm like, that might be an opportunity, because from the calendar perspective, they had been okay. Now, things have gotten a little worse for them. We'll talk about that. But from a calendar perspective, they have been okay. Context has not changed. We are still in the digital age, last I checked. We are still in chip shortage, last I checked. Everything is supposed to be going to the metaverse. You're going to need them chips. That context hasn't changed. So that hasn't changed. The calendar isn't the best thing in the world, but that's a dip for me. That is something I can get into and hold for the long term. These again are the factors and decisions that I kind of walk myself through as I'm making these decisions. One other thing about context too is when I'm looking at the market, I always start with, what is the stock market doing? What is the S&P 500 doing over the last 3 months? And notice I do this in nearly every video, at least when I talk about performance. I always say, what is the market doing? And then I figure out what I'm doing. I would prefer to be right at what the market is doing. Obviously, I prefer to do better. Otherwise, I would just get an index fund. Again, nothing wrong with index funds at all. So context-wise, the market is down 5.5% over the last 3 months. Nvidia is down close to 13%. Now, that's not great. Microsoft is down not just 9%. I say just because 4% is just kind of close, right? Not great. They both down. So negative 5.5, negative 9. But this last part that I'm going to bring up, so we talked about context, calendar, and then can you find anything that's better? I don't know, right? If I'm looking at a Peloton, yes. I can switch out of Peloton. I can find something better. Context change. It's been fine. It's been falling for a while. Microsoft, I don't know if there are many companies, notice I'm saying companies, not stocks, companies are better positioned than Microsoft. You've only had a handful of trillion-dollar companies. Apple, Microsoft, Facebook at one point in time. That's not true anymore. Tesla at one point in time. But name another company that's done this well from a stock perspective for this long and still has so much room to continue to grow. There aren't many that can compete with that, and I don't think you can find too many companies that are going to do better than Microsoft from a company business perspective. Now, can I find a stock that's better? Yeah, Coca-Cola. I don't even have to look. I can tell you Coca-Cola last 3 months have definitely been better than Microsoft because tech hadn't been good. Defensive stocks have. Okay, so, but context, right? All these are tech companies that we're discussing. So, can I find anything better? That's the last thing I'm looking at. So I'm looking at context. What's the economy doing? What's wrong with the company? Or what is their environment? How long has this been happening? And then can I find anything better? So I'm looking at the stock market at -5.5. We've got Microsoft at 9. I don't think I can really find a whole bunch of companies better than a Microsoft. From a tech, context is, again, these are all tech stocks, right? So we're staying in the same family. But take a Twitter. Twitter is also down 13%, right where Nvidia is. What is the context for that, right? Why is Twitter a good stock or not, right? That's a question you're gonna have to answer on your own. Because I researched and I know enough about Netflix, I know the issues with Netflix. So knowing the issues I have with Netflix, do I think Twitter is on a dip? But I need to know what is TikTok doing? Are they growing faster than Twitter? Are users continuing to go to Twitter? Because they're not going to Facebook. That's why Facebook started to drop, right? They lost, for the first time ever, they reported a loss in monthly active users. So Facebook is on its way down. In fact, here I'm looking at Facebook at down about 37, 38%. Is Twitter close to that? Is Twitter going the opposite direction? They also got a new CEO since Jack Dorsey. He founded Twitter and Square, or Block. He left Twitter and went to do Square Block only. Is that going to be something to help Twitter to grow versus a Facebook that's not doing so well? These are the things that I want to know. Can I do better than a Twitter when it comes to social media stocks? I don't know. I know I can do better than Facebook. That's easy, right? Facebook is down, again at 38%. Maybe I need to compare it with Snapchat and see there. These are the things I want to ask myself. Also, if I'm comparing to Microsoft does on LinkedIn. They don't make that much money from it, but it is there. We'll see, right? These are the things that help me understand, like, hey, Twitter might be a dip. Netflix, I gotta figure out what's going on because they have a lot of competition, not just a little. Facebook, y'all got some issues. Peloton, you got some serious issues. These are the things that help you to say, this is a dip worth buying. Nvidia, maybe. Microsoft, for me, maybe a Twitter, versus Peloton is a hard no. Zoom is a definite no. And that's the process, right? That is a part of the thinking, the out loud thinking of the things that I do to help me to understand. Now, what are the tools I use? I mean, you can look at Yahoo Finance, click 6 months, compare them. That's what you can do. Obviously, you want to do a lot of reading about these companies. The only reason that I can easily spit off a bunch of these numbers, or one, the numbers, because I can look at them. But a lot of these facts about these companies, because I research it and we have to talk about it, Monday through Friday, and then I do a podcast, and then I write articles for Business Insider. So there's a lot of things I have to write and know about, and then I got to post on Public, and then I got to post on Twitter, and then Instagram, and then maybe on TikTok. I got a lot of stuff, of content that I have to do. So for me, I can easily pick out all these facts. But for you, though, the way that I get these facts is by reading a lot of the articles about those companies to understand the context of what's going on. I think of anything, really the context is probably the most important thing, then the calendar, and then the hard part of finding something better, if you can find something better. So if I'm looking at Facebook, Twitter, and Snapchat, again, I'll have Snapchat on my screen. Contextually, they all fit. They're all in the same social media business. They're going to have the same global context about interest rates and tech companies. Then the contextual question is, and calendar question is, how long have they been falling and who's been falling the least at this point? And then which business do I think is going to be best positioned for the future? That is how you go through that process. So as I'll wrap this up, I'm sorry if it feels like a rant or a ramble. I'm just going through what goes through my mind. Perhaps it could be a bit more organized. Y'all let me know in the comments. So that is it for today. Remember, again, the Investors Toolkit is my premier course on how to help you in a more organized format learn how to start investing and do it in the right way. The coupon expires tonight. That coupon code is subscribe. It will be in the link in descriptions below. And then one other programming note, if you will, other than hitting the like and subscribe button and continue to share, that's really important for the channel, is tomorrow. So it's my son's birthday this week. Happy birthday to him. He'll be 4. Maybe we'll talk about his portfolio or something. But I'm going to pre-record a video for Friday. So a lot of times I say I don't get to react to what's going on in real time. I normally don't. This will be one of those exceptions. So it'll be pre-recorded. You get to choose though. If you want me to do a video on a specific topic or question, put it in the comments. I can read it tonight and then record it tonight and you can watch it tomorrow. So that'll be a co-creation process. So you get to decide what the next video is on. So DM me or especially write it in the comments on YouTube. I'll take that tonight on, what is today, Thursday? Yeah, St. Patrick's Day, my bad. I should have wore green. But in either case, we'll do that tonight and you guys will be able to see it on Friday. All right, that's it for me. Talk to you guys later.